is that venture capital is by far and away the most successful asset class in all of finance.
Yeah.
It's averaging 26% compounded per year. We are investing in what we call the ABCDs.
I was waiting for this part.
You cannot be a venture investor. You can't call yourself one if you don't have a fancy acronym. I'll simplify it into 4 things, right?
Yeah.
Artificial intelligence, that's the A. Blockchain, that's the B. Computer chips, that's the C. And D is for data. Every 10 or 15 years, the internet changes. You can basically predict when this is happening on Web3 is forecasted to eclipse $10 trillion. So more than both Web 1 and Web 2 combined. There has been more data created in the past year than there has been in all of human history.
Not a lot of people knows that actually.
Regardless of the political party that is in office, the price of Bitcoin always goes up after an election.
Can you give us a little bit of something that you've been longing for and then after the election went like from 0 to 100?
He's labeling himself the first crypto president since, let's say, Trump's been elected. You're looking at a 30% increase on the price of Bitcoin.
The step that Donald Trump did now, creating this department, it can be the domino effect for everything to balance out. Nvidia, Google,
Sure.
Apple, Meta, there is huge investment. This is Hafizknows investment podcast. We're going to focus today about venture capital. We have our guest, Mr. Xavier, the man, the legend, the myth.
Too kind.
Coming all the way from North Carolina, Morgan Creek Capital. I want you to introduce yourself to the audience in a very swift, easy to follow, understanding description and briefing about who you are, what's your firm doing, a little bit about your track record, and a little bit about what you're focusing next.
Absolutely. Well, first, thank you so much for having me. I know we've been meaning to do this for a long time, and normally I'm on the other side of this, so I'll have to excuse if I'm a little bit rusty for the audience, but I'll say that it is not my first time into Dubai, although I'm originally from the New York area. And really kind of before the investment career and talk a lot about what venture capital is, I first and foremost was somebody interested in technology. So I was building companies, both from an operator and as an entrepreneur, and really looking at the data behind the next innovations of the internet. So I was building companies in both AI as well as big data, and had a couple of successful startups, some not so successful, but really earning the stripes into what eventually became Web3. And so this was this concept of every 10 or 15 years, the internet changes, both from a software perspective as well as a hardware perspective. And you can basically predict when this is happening. Basically, every time you get on the internet and you experience that it's really not as great as you remember it being, it's time for a change. If we recall in the Web 1 era, it's when we heard those really annoying dial-up modems. And we think that maybe there's a better way to do this, right?
Yeah.
And so when we had that really high-speed connection, we also got to a point where it's like, well, I don't want to leave the internet, right? So I need to have this on all the time. Enter the mobile phone. And so now this idea of Web3 is really about incorporating the first two, reading things on the internet as well as writing things to the internet, which is like when we do a Facebook post, we are the product. We're putting our videos, our photos on these platforms. And now we can get to a point where we can actually own some of that content. So imagine a world where the Hafiz Business Podcast can now actually get a little bit more social status and points because you're providing value in a curated format to your listeners and audience, more so than somebody who has no real clue about what they're talking about, but maybe they have a following. So what that led to us doing at Morgan Creek was catching growth waves. So we've been in the business for over 20 years, really focused in on the next great wave of innovation. And for us, where it really got interesting is in 2018, where we kind of launched the first series of venture capital firms, again, with this idea of investing in the next generation of the internet. And that brings us all the way to today, Hafiz, where we are investing in what we call the ABCDs.
I love that. I was waiting for this part, the
Okay.
ABCDs. So please carry on.
Well, you cannot be a venture investor. You can't call yourself one if you don't have a fancy acronym, right?
Okay.
It has to be a
I
way
get that.
for folks to
Yeah.
easily remember what can be a lot of technology. So I'll simplify it into 4 things, right?
Yeah.
Artificial intelligence, that's the A. Blockchain, that's the B. Computer chips, that's the C. And D is for data.
I love that.
And so I'll kind of go in reverse and
Yeah.
mean a little bit more in substance what this actually represents. So if we think about this, there has been more data created in the past year than there has been in all of human history. And it's only growing exponentially.
Not a lot of people knows that actually.
Exactly right.
Yeah.
And so every single day we're adding more and more to this, right? We're adding 300 million gigabytes into this space, sorry, terabytes, which is a zeta gig. So it's basically an astronomically large number, right?
Can you make any like visual representation of this gigantic amount of data?
Right. So
Anything similar, like how many planets Earth this data is?
yeah. So basically, if you can think about it in terms of, a song that you may download, right? So let's say a song, we now stream our music, but in the past, let's say if a song was 5 megabytes, right? There were 1,000 megabytes in a gigabyte.
Yeah.
There's 1,000 gigabytes in a terabyte, and then there are another 1,000 in a terabyte, right? And so beyond that, you now have 300 million of these terabytes,
and that's now being every day,
every single day.
Wow.
Right. And before
Gen Z will not relate to this.
Right. And so when we have these concepts of, always on or streaming, that data has to live somewhere, and we don't really consume it as a downloadable thing, but somebody is downloading it somewhere, and that's what the cloud is, right? So that goes into the C of artificial intelligence, computer chips, right? And so computer chips are all around us. So if we have this idea where in this room, we're in a beautiful studio. Thanks for hosting us. You can find and expect the average person to have somewhere in the vicinity of about 10 to 30 of these chips.
Wow.
Which, is a good amount. But in 10 years' time, that will be 1,000. Right. And so all of these chips have a very specific function. And so when we look at things like storage, it's really the ability to do 2 things: being able to store something for a long time and not have it be corruptible, but then also retrieve it really quickly when you need it.
Yeah.
Exactly right. So that has 2 kind of different functions and 2 different kinds of chips. Without getting too technical, it's kind of like
let's try
long-term and
relatable.
So we'll bring it down to one thing that people have heard a lot, right? Which is artificial intelligence, the A. And so we are now familiar with things like ChatGPT, and it provides a lot of users this utility with basically asking a question and just magically getting an answer. And so that's really powered by the data and the chip, right? Because now we have a chip that can get data quicker.
Yes.
And so really all AI is, it's running pattern recognition on a bunch of data. And the better the data, the better the answer. We've all had the scenario where we ask ChatGPT a question. It doesn't say, I don't know. It'll just make something up.
It will not say, I don't know.
Yeah,
it knows something. But how accurate what this tool knows depends and based on the data provided to it.
Exactly right. And as we train computers to think more and more like human beings, they act more like human beings. Like, for example, there's a joke, that my wife always says that I won't ever stop to ask for directions. And I think AI is the same way. It won't stop to ask for directions. It'll just keep driving. So that leads us to where blockchain meets. And what is blockchain? We're not necessarily just talking about, gambling here and seeing what is the next fad of the week. When we say blockchain, this is a fundamentally different way of storing information.
Yes.
Think about it as a fancy spreadsheet, but a spreadsheet that can never be deleted.
Exactly.
And so if you add the 3 of those or the 4 of those together, you've got increasing amounts of data exponentially, which leads to a better artificial intelligence engine. You need to store that somewhere. That's your blockchain. And of course, the power of all the software is enhanced by new chips that come out every year.
Beautiful.
So that's our ABCDs.
Yeah, beautiful. So basically what Xavier is trying to say is this is the foundation and the infrastructure for the next, decades or hundreds of years that we're going to live. And that's bring, I think, to the first definition that you mentioned is you kind of predict what's the next wave. So, and if we looked historically, that's true. But who is there to look into it? It now comes to people who are interested in ventures and venture capital and investments. All right. So you catch the waves before it goes. Now, and with all what you described, your ABCDs, what the challenge that you see coming up next? Let's say, let's not go so far.
Sure.
We'll come to that point, but let's not go so far. Let's say for the next 10 to 20 years.
Yeah. And I think you summarized it really well, because the point of a venture capitalist is still at the end of the day to generate a return for the investor. So you cannot invest in something.
This is what we're trying, sorry to cut you, but this is what we're trying to teach the investors, to teach the policymaker, to teach the decision makers, not only out there, also here in this side of the world. And the role of the venture capital and the overall the venture capital investors, being individuals, being institutions, is not to think of the returns now. The thinking, the time span is anything between 7, 10, 20, 25 years. And historically, that been the case. And in every wave, as you described it, it's been like that. Whether it was cars, whether it was radios, mobile phones, computers, it's always been like that. The venture capitalists invest now and then reap the rewards 2 decades down the road, right?
Exactly right. And I think you captured that really well. And what you're touching on is a concept that we call the S-curve, which is basically a fancy way to say some things start from a very small number of people, and they are kind of the innovators, the first people that are trying a technology. And it may not work, and you may not want to invest at that stage. But once it kind of gets to the next step, which is the early adopters, a lot of angel investors, some early stage venture capitalists will look in that kind of stage of an investment. And really what this is trying to do and to accomplish is to address a risk-adjusted return. We're in a finance podcast anyways, and I think this is an idea of, you know, depending on making a return, it's not enough to make a return in an absolute way. You want to make a return commensurate with the amount of risk you're taking, right? So if you are making an investment with very little risk, it is probably unrealistic to think that your return will be that much above the risk-free rate. It may be, but it's not necessarily repeatable or sustainable. And if you're doing something with high risk, well, then you better assure yourself that you're going to be compensated for that risk.
You better have a good heart, strong heart.
And so to the question about, you know, what's coming in this, you know, 10 or 15 years, that's really where we spend the majority of our time thinking about. And you have to sort of, you know, keep 2 feet on the ground, but you also have to reach for the sky.
True.
So you have to know what is kind of up next and what could be potentially going to the step in the adoption curve that we call the early majority. And so the early majority is basically right when you're starting to see more people talk about this. So if you want to think about something like a smartphone, you know, the early majority in the smartphone might be argued happening before the iPhone itself, right? Because when the iPhone came out, there was already a mass mobile internet. So it was already productized. It already had wide connection. It had carrier support through Verizon, and it was global, right? But maybe when something was developed in Symbian, in the Nokia platforms, people didn't really recognize that as the internet. It was its own first thing. But the people who were using that and putting your email on that were some of the early majority people. So if you invested into some of those platforms, that could be some of the early shades of venture capital. So when we look at what's to come in 10 or 15 years, it really starts with where are some of the problems today. And so at the end of the day, if you're creating any technology, it needs to kind of accomplish one of 2 things. It has to make things a little bit easier to work with, or it has to make things a little bit faster and cheaper to work with, right? So ease versus speed.
Yeah.
And then in the end, they'll hopefully accomplish, one of two goals, which is either increasing profits or decreasing costs, right? So it's a matter of efficiency. And it's really just that simple. And that's what we look at some technologies within the ABCDs. What gets us the most excited about this are the intersections, right? The real applications.
Yes. So the inventions where there is an overlap
exactly
between the four lanes that you're focusing in.
Exactly right.
Okay. It's like the ikigai of the next solution.
That's right. That's right. Okay. It's so important because I think what you tend to see is, let's say one of these solutions by themselves, they could be okay. But if you have a chip company, for example, and the chip company is just to make a faster computer, let's say, however you define it, maybe it's, computations per watt hour. That might not be that successful if you don't define, well, I want to have a greater amount of computations per terawatt hour relative to the power that I'm using. Okay, well, now you've made a really important distinction. Now you're talking about efficiency, right? Making things a little bit less costly.
Less costly.
And so that might mean
consuming.
Exactly, right? That might mean that this chip might be better suited for a mobile phone as opposed to a data center. And so now I can think about what this chip needs to do for a mobile device. So I've combined kind of two things. I've combined chips and I've started to introduce artificial intelligence.
Yes.
Because now I'm using data.
So much data,
in order to make that more efficient.
Yeah. Okay. Interesting. Why I asked what are you solving on the long run? And I asked you we will come back to this point because the events that happened in the past couple of weeks, and especially with the lanes that you're focusing on, I assume it accelerated a lot of your efforts. I'm talking about the re-election of Donald Trump.
Sure.
And the intersection between what he was being promising in his campaigns and what you guys are also focusing, which is, again, artificial intelligence, blockchain, chips, and data.
That's right.
So can you give us a little bit of something that you've been longing for, and then after the election, it went like from 0 to 100. You know? That's a little bit of examples, and we want to, make an analogy or give some numbers so we can imagine the magnitude of this acceleration.
Yeah, no, it's a great question. And I think, when we look at the impact of the election in the US and what it could mean for our tech industry, what gets people excited about any change in administration is a little bit more clarity on what might be on the horizon. Okay. Where we had our industry on the venture side, things were growing, but we had a little bit of a market reset over the last couple of years. We had some pretty high valuations that were basically reset because of a couple things. The macroeconomic climate was a little bit uncertain, a little bit murky. High interest rates meant that all of a sudden startups couldn't get cheap access to capital. So they had to wait a little bit longer to raise funds. Some didn't survive, and some that had to raise, they didn't hit their milestones. And so therefore their valuations came down.
Yeah.
So what is happening now is this idea that there is an embrace on things like cryptocurrency. And I think Trump, hopefully he's correct in this, is he's labeling himself the first crypto president. Yeah. And so what that basically means, he came out in Bitcoin Nashville. I know you've seen this event. It's one of the Super Bowls of our industry. And it's an event to really promote what is happening in the Bitcoin space specifically. And what this would mean, and I think if you zoom out a little bit and talk about what's going on with Bitcoin, every 4 years, there are predictable cycles about what the price will do with Bitcoin, rising up and then kind of falling as new Bitcoin are minted every 4 years. And I thought what was very interesting is we did some research about this and found that regardless of the political party that is in office, the price of Bitcoin always goes up after an election, right? So it's already pre-programmed into this. And I know that your show does a lot of research into behavioral finance.
Yes.
And so part of the beauty and the simplicity of Bitcoin is it also removes some of the biases in terms of, well, do people think that this is a very speculative asset? Do people think this is going to perform well? there's definitely a component of that of Bitcoin,
Yes.
but it's also very predictable in terms
Yes.
of what cyclicality
Yes.
will do. So if we're thinking about numbers and the impact since, let's say, Trump's been elected, you're looking at a 30% increase on the price of Bitcoin within less than a month. And so why is it doing that? There are a couple of reasons. There's basically three things that he suggested that could drastically improve the price of Bitcoin and therefore potentially shift everything up a gear in tech. One was creating a strategic US reserve in Bitcoin.
Yeah.
And so this could mean potentially the US buying 1 million Bitcoin over 4 years, 200,000 per year. And as you know, we don't exactly make new Bitcoin that often, right? It's sort of this exponential curve where we're getting close to the end. And so by the US sort of committing this, it's really setting this precedent that, number one, it's okay to have this asset on your balance sheet. And we've seen other companies respond like, did you know that the nation of Bhutan, a third of its GDP is actually held in reserve in Bitcoin.
Oh, really?
So they've pledged up to $1 billion in this asset. And of course, El Salvador has made it a national
Salvador
currency.
is known, but Bhutan I didn't know about.
Bhutan is this little known fact, which I think is amazing and shows their kind of commitment and growth. And that is something that really, why would they do this? I think it's doing a couple things. It could be a potential inflationary hedge, but it can also serve as a cheap, frictionless way to move money across borders, which is the second thing that Trump actually mentioned. This idea that there could potentially be no capital gains tax on U.S. Cryptocurrency companies, which is why, in addition to the rise that we saw in Bitcoin, we also saw a rise in Cardano and Ripple because those are US-based protocols. And he suggested that if companies come back and domicile in the US, they would get the same tax treatment. And I guess it creates a lot of intrigue, right? It creates a lot of intrigue. And so when we saw in this election, we saw 300 of the 400 plus lawmakers all be pro-crypto candidates. So this is a big shift.
It's a big shift.
That's really what people are getting excited about, Hafiz, is this idea that crypto was becoming a little bit more mainstream. So if you look at that S-curve where you mentioned the innovators and then the early majority that can come after the early adopters, we're kind of getting to that point where if you see companies like BlackRock issuing new products that can allow people to trade Bitcoin easily, well, now you really have some momentum. And I think when you look at what this could mean for startups that are engaged in the Web3 economy, it gets us super excited.
Yes. So I anticipate also now the craze of the Web3 startups is gonna take that slope again upwards. But I was also asking about specific numbers, let's say, within your portfolio that you've noticed, okay, we have got this portfolio company or this being growing after the election this much. But I'm also going to go one point back where you mentioned these government officials that new ministry came out with such a name, everything. But also that made me reflect on how much this man is going to influence and to impact the industry, not only because you're looking into efficiency, right? And the ABCDs are embedded within that because everything you're building is to enhance something, as you mentioned, make something faster, better, cheaper, and so on. So when this embedded with the government mandate and what they want to do, at least let's say for the next 4 years, I anticipate a lot of flooding from these Web3 companies and technology companies, and also perhaps some of your portfolio also going to catch with that craze. And it's not going to, when we say craze, because usually there is a negative strings to it, but craze in a good way, meaning there is always a push that happens somewhere, somehow, to accelerate this development. And we always seen it in the S-curve. We've seen it 20 years ago, we've seen it 40 years ago, we've seen it 60 years ago, and so on, so on. So if you could tap into these 2 points. Firstly, the numbers in terms of your portfolio, and second, what this Doge going to do?
Yeah, great question. So on the idea of numbers, when we spoke about the way that the internet changes every 10 or 15 years, let's kind of put that into context. So if you were fortunate enough to invest in those first couple of Web 1 companies, and actually the most successful website in 1995 was encyclopediabritannica.com. So it was a very kind of basic search type of environment, and you can get information like you would in an encyclopedia. If you were able to invest in kind of those first early set of Web 1 companies, those investors made around $1 trillion, right? So very fabulous outcome.
Wow.
But if you went into...
But also, let's, before we move to the next one, let's put it in perspective. So if someone is making $1 trillion, in how much time?
So that is over a 10-year period.
10 years. So you're making 100 billion every year?
Compounded, depending on when you exit a company every 6 years, roughly.
The point I want to emphasize here is even for the so-called short-term investors, when you look into this, you have this opportunity, went into $1 trillion, compounded 100 billion or 10 a year. It's such a great deal.
Absolutely. I mean, Warren Buffett, kind of the Oracle of Omaha, he is a real big advocate for buying mispriced assets. And I think that there is no greater mispriced asset than a private venture-backed company.
Yes.
Because you are really betting on the team, the market, and the terms that you entered in to the opportunity, and then, of course, the product.
Yes.
So when you are having success in kind of this early internet phase, a lot of investors will continue to roll over their profits into the next wave. And what we've seen time and time again, dating back to the last 40 years, is that venture capital is by far and away the most successful asset class in all of finance.
Yeah.
It's averaging 26% compounded per year.
Wow.
That doesn't mean that every single year you're going to get 26%. Some years you might only get treasury bill rate of return, but other years you can get
treasury
higher.
bills like 6%, guys.
Exactly. Yeah. 6%. So you really, this idea is that it should absolutely be an important part of growth in your portfolio. And that's where we got our roots from in the endowment model. This idea that it wasn't enough to just have, 40-60 allocation between stocks and bonds. You needed to actually compensate yourself for the additional risk and therefore get a higher potential rate of return. And so alternatives for us were really born out of this idea. And so it kind of flows into what happened next in sort of the Web 2 era. Was there a letdown? Did investors do less well in Web 2 than Web 1? They did better, but not just by a little bit, by 5 times. Wow. So when we kind of get to this next phase, and these are companies we know very well, right? The Googles of the world, the Facebooks of the world. And these are companies now that are driving not just performance for venture investors, but they're driving performance for every person who has a 401k, every person who invests in the Fortune 500 companies. They're getting driven by these early stage venture capitalists that were able to find these companies and kind of grow them into a successful exit, right? And so when people are the most excited about Web3, it's because the growth on Web3 is forecasted to eclipse $10 trillion. So more than both Web 1 and Web 2 combined.
Yeah.
And the idea is it is very difficult, and there are very few examples of a successful Web 1 company that now bridges over and becomes a successful Web 2 company, and then bridges over to become a successful Web 3 company.
And here there is a very important point. I assume most of the people don't know how big of investment these successful Web 2 companies are putting into grabbing and kind of catch the wave on the next development.
Absolutely.
So you name them, NVIDIA, Google, Apple, Meta. There is huge investment. And again, as much as I try to make the people understand the size of this investment, the impact, and how this affecting everything we do now. And this is driven by the investment of these companies, because perhaps they noticed that not every successful Web 1 company made it to the Web 2.
Exactly.
And to prevent this, so they start these investments now, finding the next wave, the next winners, for the Web3 that under their wings.
Exactly.
So I would also think that maybe Microsoft have done that because their model was not to invent, their model was more to acquire. So now we're witnessing multiple big companies are doing the same, and I think it's just going to get more competitive, getting bigger, and of course the end user is reaping the whole reward of this competition, right? Now the second point, the Doge.
That's right. So I'm so glad you mentioned that idea of acquisition, because it was really why I became a venture capitalist in the first place, was working for large companies, selling companies. This idea was, if you could get on the front of the innovation, I might not be a true innovator, like the ground one person to say, okay, we're going to use XYZ protocol. That is really, really difficult to do, but some people are very successful at it. But if you can now spot those early adopters, the first people who start saying, actually, you know what, now we're sending Bitcoin to buy pizza, right? And people always laugh that the first Bitcoin bought in pizza, or first pizza bought in Bitcoin was $10,000, right? But you know, that actually allowed the rest of the network to flow, because it proved that you can actually exchange Bitcoin for value, in this case, pizza. So when it comes to something like Doge, and why people were freaking out, was because it's an opportunity here to get tech a little bit more front and center when it comes to kind of US regulation. And so this idea was that if we look at governments, in a large country like the United States, there are a ton of inefficiencies. And one thing that our listeners may not know is that the largest venture investor in the world is the US government. Right. So you have this kind of paradox. At one time you have this very large set of institutions, but then you also have some bit of investment that is occurring there. So when you had somebody like Elon Musk, this guy is a serial entrepreneur, and say what you will about some of his controversies. I won't really go into that, but I'll kind of say that what he can show us is this idea to be incredibly forward thinking. And while people went nuts about this on the Department of Government Efficiency, he was known to be a very early backer of the Doge coin, which is basically a spoof on Bitcoin. It's a fork of Litecoin, which is a fork of Bitcoin. And there was not really any utility towards this cryptocurrency like you might see for Ethereum or Solana. But given that the Department of Government Efficiency was headed by Musk, and he has an investment in Doge, Doge rose way faster than Bitcoin. It grew like 100%. And some people are calling it to grow double from where it is today inside of a year's time. And so this kind of creates this excitement on, well, if now Musk has done other things like allow for companies to buy in Bitcoin, companies that he has started. And he's also allowed, I think at one point you could have bought a Tesla with Dogecoin. And so this kind of creates an opportunity to rethink what these networks can do. Sometimes things start off as a joke. I mean, Bitcoin started off as a joke until it basically was able to find this product market fit or another point in the S curve. So when we look at these growths in these meme coins, really the growth is, there are kind of more supporters at a government level. There is potential for further reinvestment and growth in the utility of what's happening on the underlying currency.
Yes. I want also to touch on the point that, as you just mentioned, there is kind of paradox where the US is the largest investor. At the same time, there is investment going on. My observation is, I would say they are the largest investors, but also there is a little bit of a bias. So maybe this makes the scale not even in where the investment is going. However, what I can also observe and kind of predict or see happening down the road is more balancing to these investments. And that's not because I would say the US wants to, it's kind of because what's just going to happen, because a lot of dynamic shifts in the world overall. I'm not going to a lot of politics, but there is always a way to balance these dynamics. And I think the step that Donald Trump did now, creating this department, it can be the domino effect for everything to balance out. talking about this department back in the US, I can say proudly, this happened here even way earlier than it happens there. Sheikh Mohammed bin Rashid Al Maktoum, the ruler of Dubai, they made this initiative of, they call it zero bureaucracy. So the efficiency of the government transactions and the time and money you spend to go from point A to point B to do something. They've been this initiative, I think, for 1 year now. The efficiency increased like to the roof. And again, in my perspective, I see this that's happening here, that's happening there. How is it balancing the dynamics? And one of the things that Donald Trump also spoke about is that he's going, let's say, to have talks with Russia to end the war in Ukraine and also what's happening in Gaza. So seeing this from zooming out and all of that balance, I always see great things happening in the technology, in the ABCDs. And that's really the foundation of how we are going to live our lives in the next decades to come, within our lifetimes and so on. One final point that maybe Xavier didn't mention, they are one of the leading venture capitals in the US. How much you manage now? $1.5 billion?
So under the entire umbrella, it's probably close to that.
Yeah.
On the venture side, we've deployed close to $500 million across 4 funds, over 100 investments.
Amazing. That's a track record. And just to make it in a perspective that what they are doing, guys, is if we took the example of Elon Musk has the potential opportunity to become the first trillionaire in the history. Why? Because he bet on himself first. He doesn't trade on stock market. He has no other investment aside of what he's doing. So, and all his companies are focusing on the infrastructure of the future.
Sure.
If you looked at it. So he placed himself to be the first adopters, or to be the first in the wave, and he created the wave for the future. So all of this infrastructure investment that he did is what's shaping whatever we conduct our life now. This what you guys are doing, and at least it's my perspective. So being there in this, and I know your portfolio, I know what you guys are doing, I know the opportunities there, and my prediction went straight after that, the election, I was like, this must be tenfold by now. So placing yourself in front of the opportunities, as you said, and to catch that S curve is the way to go. So guys, the point here, put yourself in front of venture capital funds and in venture capital opportunities. We have one of the most advanced regulations in the region. I'm talking in UAE, ADGM, to that facilitating and putting the right tools and the right channels for venture capitals, for funds to come in and to also to deploy. So this is a message to the whole audience who's listening to this, whether it's here or anywhere in the world. There is a huge opportunity coming, and the best returns is for the people who adapt early on and have patience, right? We're not coming to here and tomorrow you will see the fruits of this. Thank you so much, Xavier. I know we've been bustling around, trying to catch the time, but this came very spontaneous and I'm so grateful. Any last words you want to say?
Well, I just want to also give a huge thank you for the invitation and echoing a lot of the enthusiasm. I think that we have been in a moment where a lot of people are on the sidelines, to your point, and they're trying to observe what's going on, and they're making the wrong decision. A lot of people struggle with going from 0 to 1, and so they just stay at 0.
Yeah.
We have really encouraged our investors and our broader community to at least put a little allocation towards venture. If 0 is the wrong number, and maybe for that individual investor, maybe 10% or 15% is too much, although I would argue that it's not enough. but 0 is the wrong number. And so having a little bit of that exposure does exactly what you were talking about with the major companies today. Going back to the point that you mentioned about like all of the CapEx from the FANG companies, the Facebook, Amazon, Apple, Netflix, Google, about a third of that is going to NVIDIA, right? So that is going towards AI chips that are doing advanced machine learning, and they're going to need startups to power that
100%.
because NVIDIA does not actually build the chip.
100%.
They sit on top of a foundry which
Yes.
produces the raw hardware, and they rely upon startups to kind of get the right formula or the recipe, as we call it in the business. And that is really where startups can compete because you don't necessarily need all the money in the world. You need a smart team, somebody who's actually done this before, and a little bit of luck with the timing. And I think when we look at this next set of venture vintages, they're going to be some of the best performing vintages in history because we have all of these colliding forces that can really lead to some positive outcomes, like better economic climates, like more people having chips in their pockets. And people are not necessarily going to clamor for less connectivity or for slower connections. It's always
We
to
don't see
increase
that coming.
So I'll leave the audience with, it's an exciting time, and I'm so happy that and privileged that I get to be a part of it, and looking forward to coming back and inviting you to join our show next time.
I'm coming 100%. Thank you guys for watching. That being Hafizknows Investment Podcast. Our guest, the GP of Morgan Creek Capital, Xavier. Thank you guys for watching. Follow me, follow them, and we'll keep you posted about the latest news on the VC world.